Hello everybody, and welcome to this daily market update. Today's May the 3rd, and we are going to have a look at an exotic pair, a pair that is at a very significant level. As you can see, price is holding, and it's holding really well. This is the USD Hong Kong pair, okay, Hong Kong dollar pair. Anyways, so what do we have? We have an excellent opportunity here. I'm bringing this opportunity to you, and as you can see, this is a buy opportunity. This is a buy opportunity that you can take advantage of, and of course, you shouldn't be always looking at like majors, etc. Majors, like you have lots of manipulation in majors, and lots of people get burned, like trading just majors. There are lots of exotic pairs where you can find, easy to trade opportunities, by the book, textbook opportunities. Because what is very important to you is to make money, not to trade like others. Not to follow others because they are trading Bitcoin or I don't know, or USD Japanese yen, or USD or Euro USD, etc. So you don't have to trade the euro, you don't have to trade, like you can trade exotic pairs, and you just have to make sure that when you're trading them, like you make sure that like your broker has these pairs, and also that like the spread is interesting. So you have to look, to shop around, to be able like to find the best possible deals. Regarding swaps also, swap also is very important. So overnight, like like the cost of keeping, like or holding, like a pair overnight, etc. Because in some pairs you'll get paid, and in some pairs it's going to be like a liability. So you are going to lose money by keeping that trade open, basically. Anyways, let's get to it. Let's get started by doing our analysis. So my name is Mehdi. I've been trading for 4 years, and this is the first week that I'm doing these kind of videos. I've been trading mainly the Euro Japanese pair, as well as the DAX. So I'm trading the DAX every day. I'm doing it on a daily basis, and what I do mainly is try to find high probability trades, and that's it. So in the channel you can find like several trade setups that have been given and are still given until now, and just to understand how we trade, and to understand what kind of what kind of strategy that we are using. We're using very simple strategy. It's a simple strategy. It uses Fibonacci retracements, as well as like price action, key levels of support and resistance, as well as a little bit of Elliott waves when needed, and when market shapes are very easy and very easy to spot and to read. So if two traders can't get the same information from like a corrective wave, it means that like this corrective wave is not complete yet, etc., or this shape is not complete, and you can't really base your decisions on that kind of structure, or even like count waves to come to a convincing conclusion, or to a conclusion that can give like a high confidence in your trade. So anyways, so here what we have, we have a 5-wave structure. We have a 5-wave structure, and we are at the bottom. Okay, we are really at the bottom. We are at the bottom. So if we are at the bottom, what can we do? Well, what we can do, it's starting even here. It has started even here. Anyways, it's not important where it started. What is important is the shape that we are getting at that correction, because it's not counting waves that tells me that this is going to, let's say, reverse, but it's the shape that we are getting at the resistance level, or at this is getting on my nerves. But anyways, let's look at it. Let's have a look. First of all, we have a high probability that at least we'll have some levels that are going to be tested. So we're very far, very far from even the closest level, which is the 23, which is the 20.6% Fibonacci retracement. So we're very far from even, like a little retracement. So what should you do? Well, you should wait for at least, like a breakout of this level. Okay, let me draw it better, because this level is key. In this structure here, this level is key. So wait for the breakout of this level, and then you can place your stop loss just below the level, because if it's going to go like deeper, then you don't want to be in the trade. So you wait for a breakout above the level. Let me do it in the 1 hour, so we're getting, I will give you more information. Anyways, you also have another trade, but this is going to be like a daily, a day trade opportunity. The day trade opportunity is as soon as we get a correction. As soon as we get a correction here, I mean a deeper correction, of course. So as soon as we get a deeper correction, here, you have an opportunity to buy, because it's going to form, if it forms something like that, like a contracting flat, then you have an opportunity to buy. Okay, you have an opportunity to buy and price to go and retest, like these two key levels. But if price, if price comes here and stays, like above this level and then corrects here, just buy. Okay, this is a buy opportunity, and this is a huge buy opportunity. Buy opportunity. Okay, no need to trade the majors. No need to trade the majors. You can trade just, you can just use these kinds of charts that are crystal clear and even easy to read for a newbie or for a beginner. You don't need to get, sophisticated or to use, even harder to read, charts to be able to make money. As you can see, you have higher lows here, meaning that we are in an uptrend. This is an uptrend. No matter what you say, this is an uptrend, and this is clear. Even a beginner will tell me that this is an uptrend. But as I said, you shouldn't be breaking this low. Yeah, if you break this low, and if price breaks this low, okay, if price breaks this low, okay, careful. You have to be careful, because careful. Okay, you have to be careful of price breaking this low, because if it breaks this low, what can it do? It can stay below it, right? It can stay below it, and then it can even break to the downside and retest the low. Okay, because there is a possibility that we get a double bottom here. You have a possibility to get a double bottom. So you see, so be careful, don't buy blindly. Double bottom possibility. So we have the double bottom possibility as well. Okay, so we have a double bottom, but this is a buy opportunity. Whether it breaks there and then you just close your trade with a small loss, and then you buy again, because this is going to go up. Okay, this is going up, but you have to be careful, and you have to use, common sense, and also price action and candles to see if candles are closing below the level and staying below the level, because it can also, not close, tag this level and maybe go even, beyond the level and go through it. But when the next candle closes, it will close above it, meaning that it was a fake breakout, and meaning that this is an expanding flat, and meaning that this is just a continuation pattern. This is also a continuation pattern. Okay, so you have everything, and I don't want to make this video too long. So if you haven't subscribed, please subscribe. If you like the content, of course, you can subscribe, and I'll be coming back with more market updates and videos. Thank you.